How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training program. What we're going to do is we're going to do a really quick breakdown of Tesla. And we're looking at Tesla from the perspective of a person that wants to start to analyze Tesla as it goes into its earnings, and then how we may think it may come out of earnings based on what's going on in the market, and also how it performs. So I'm going to give you a really quick breakdown of Tesla and kind of show you some of the steps and the procedures that I go through when I break down a company. So this is going to be really good for a trader that wants to kind of understand how to analyze trading situations outside of like just watching a YouTube video and letting somebody else tell them how to analyze it. So what we're really trying to do is empower you with the skill sets that are going to allow you to go into the market and make money and generate income for yourself, and not be as dependent on a lot of the institutional stuff that historically you've been told to be dependent upon. So looking at their summary, we have Tesla earnings at around April 27th to May 3rd. Right now they're trading at around 7.59, and Tesla's activity has been very, very bullish today, right? Really over the past, maybe say 1 to 2 days. So looking at this chart, let me bring this back out. The question we want to ask ourselves is that what's going on in the market that can be impacting Tesla? How do we think Tesla's going to perform as it goes into earnings? And also, how do we think Tesla's going to perform as it comes out of earnings? And then how has the market reacted to Tesla earnings, maybe over the past 3 to 4 earnings? We understand that somebody put out a price target for Tesla at around $1,000, and we're going to kind of go into a little bit deeper at that and how that may affect the share price. And then also, we're going to kind of break down Tesla's business model and try to give you a better understanding of that, kind of based on how Tesla's set up, right? So let's go into that. So we got that set up. So looking at Tesla, and we're looking at this particular chart. This is a 1 year. Each candle represents 1 day. And what we're seeing with Tesla is they got around 900, started to sell off. We're going to go into this sell off here a little bit later. And then we're seeing here, this is when we had all the issue with the 10-year treasury and a lot of people pulling out of the NASDAQ, pulling out of tech because they were worried about inflation and putting their money into other areas. So we're seeing a really, really strong sell off here that started at around 860 and stopped at around 563. They were seeing people buying in. We're seeing some consolidation. We're seeing a little bit of a sell off again, stopping at around 600 and then being bought back in. Another small sell off. And then what we're seeing is that the last few days, we're seeing this increase, right? Now, here's two things that I'm seeing when I'm looking at this chart. First thing I'm seeing is I'm seeing what I call just some basic evidence of support around the 600. So we had talked about before, Tesla ran up really, really hard. We never really got any kind of consolidation. We never really got any support. And then so as a result, when it started to sell off, there was really no support or historical support that we could believe that it would come off that particular support line and start to get bought back in again. Well, we see that now around 600. So what we're seeing is that as Tesla sold off, it got around 600 and it got bought back in again. Sold off again, hit around 600, got bought back in again. So what we're seeing is that Tesla may have a really strong support around the 600 price point to where the market is comfortable selling back in. So what we're seeing is that if people feel that Tesla may be a little bit too risky to own, or maybe the amount of position that they have may be too risky to be in, they may need to trim it a little bit, and they decide to sell out of Tesla. What we're seeing is that the market is believing that based on current market conditions, around 600 is a really good support for Tesla. And that's going to be conditional based on the overall market at that particular time. But what we're seeing is that the market was able to emotionally accept buying back into Tesla at around 600 over maybe a 1.5 to 2 month period. So what we're going to look for in the future is that support going to hold? And then what is going to be Tesla's new resistance? Is it going to be around 900? Or is this particular price point going to push up? Now, as a trader, what I'm going to do is I'm going to create a bullish case and a bearish case for their earnings, which is coming up, I want to say a little bit later this month. Let's look at it again. So we got April 27th to May 3rd. So that's a little later this month. Early next month is when their earnings is coming out. So we're going to create a bearish and a bullish case for Tesla. Now, the first thing that I'm going to do is I want to know, how did they perform last earnings? So looking at their earnings, right, we got it in a bar chart. What we're seeing is that their estimated EPS and their reported. So this is the one where they did really well. We're seeing here they had estimated 0.22. They reported well. We're seeing here, which was their last earnings, that was 0.63 estimated, and they reported at 0.24, right? So they missed their earnings. And then we saw that the estimates now have been lowered. So it may make it easier for them to hit it, right? And then we want to see how they report. That's a bar graph. Now we have it just in, from a numerical standpoint. So the one that they missed was a 127.21, in which earnings per share was estimated. Earnings per share was reported at 0.24, but they estimated 0.63. So I'm gonna look at that 127 on the chart. And what I'm seeing is, let me move this up a little bit. Around here is a 127, right? So we're seeing is that they reported on this date, and then we see that it gapped down the next day, and then it sold off. Now it started to recover, right? Started to recover here. And then here is around where we had all those treasury yield issues. And I guess a lot of the risk analysis or the risk people felt that, you know what, maybe our position that we're currently holding in Tesla might be a little bit too risky. So it may be time to kind of trim our position, take a little bit out. And we started seeing Tesla started to really sell off, and selling off on a really, really good volume, right? So selling off on really good volume. So we're seeing 40 million volume on some of these red bars. And then it got around the 600, and we talk about it started to recover. So we know that when they missed earnings last time, right, they sold off, and their earnings estimate was 0.63, and they did an earnings per share of 0.24. Now, what we saw here now was we did an earnings estimate now of 0.44. So we lowered the estimate. Let's see if we can hit it. But that estimate is still higher than here, and it's definitely higher than these. OK, so Tesla now, as a more mature company, the expectations have been raised on Tesla. We got to see, can they handle that? Can they manage those expectations? Because we raised them. And then what we're seeing is that currently right now we have an estimated EPS in quarter two of 0.61, 0.79, and then even 104. So the estimates continue to being raised, and they can change these. But currently right now, this is a higher estimate than what they've had historically, but it's not higher than the last one. So they probably went a little too high with this one. And we saw that Tesla hit around 0.24, so they couldn't get it. OK, so what we're looking at is Tesla misses earnings. We see on that last chart when they missed it. This is before we had the massive turmoil in the market. They started to sell off. In fact, they gapped down. So as a trader, if we're playing this for the miss, right, we may play it to where we're not going to necessarily buy the contract before earnings. We may look to see how they come out. I don't know whether they're reporting in the morning or in the evening. And then we may scalp it. Right now, that's a higher level play. That's a pro play. But there are some higher level pro traders that actually watch this channel. So we may decide to scalp it, because from a swing standpoint, if we buy it before, we're putting ourselves at a lot of risk, because they may report really, really well, or they can report, lukewarm, and it trades flat. So it doesn't really go up or go down. It just trades flat. We don't get a lot of velocity or a lot of volatility at all. Now, if it does really well, we want to say, well, maybe we can shoot it up north of 850. So what I would be looking for in both scenarios is how higher do we get past 800 as we move farther into April. So we're doing it. We're having a strong move today, but we're still earlier in the month, right? We saw it reject 900 or around 900 twice. We have a lot of time until earnings. What we may see with Tesla, and we got to observe it, is that it may move up a little north of 850 and start consolidating in anticipation of earnings. Another thing we got to look at is what is going to be the estimated or the expected move of Tesla from an option standpoint by the market makers on the week of earnings, right? Because what that's going to do is that volatility forecast is really going to determine premiums, because if you buy it early and we don't get the expected move, it's going to start to erode your premium, something that we call volatility crush. So that's what we want to observe. Now, if I'm looking to play the downside, I want it to move up really, really rapidly, because if they miss earnings, or let's say they meet earnings, but their guidance is really not that powerful, Tesla may start to sell off again. And so then if I can get them to get past the 850 to 900, right, I have a lot more room for them to go down, because what I'm seeing now is I believe 600, around 600, 650 may be their support, but I have a lot of room for them to fall. So as a person that wants to play the downside of the play, I want them to move up really, really strong before earnings. That gives me some room to play it, especially if I just want to scalp it. Right, because there may be a massive move to get out of the position, or to eliminate some of the risk associated with having that in the portfolio the day of. And then once those people are out, then Tesla will go back to like its normal trading pattern the rest of the week. Now, that's what you want to do. Now, what we're going to talk about is that somebody issued out a price target for Tesla. So this guy from Canaccord, which I've never really heard of, but it doesn't mean they're not relevant. It just means I haven't heard of them. Took his price target from 419 to 1,071. So that's a 124% boost. Now, we understand price targets are 6 to 12 month projections. And we saw that pushed Tesla up about 1.5 in pre-market, and it's still moving up right now. He projects Tesla energy storage to be around 8 billion in sales by 2025. And that's kind of his projection. So we're going to kind of go deeper into their energy sales. Now, what I want you to understand is that a lot of times these analysts put stuff out, then that's to the benefit of their particular firm and also to the benefit of their clients, does not necessarily have anything to do with you. So I would always tell you to take analyst expectations with a grain of salt. Essentially, you can learn to do what an analyst does if you take some basic accounting classes, because really what they're doing is fundamental analysis. Analysts don't really look at charts. So they're looking at the internal financial documents of the particular company and maybe some expectations they have on product releases, things of that nature, partnerships. And they're coming up with a narrative based on where they think that value of that company actually is. A lot of that you can get just learning how to read basic financial statements. They're not doing anything special. Now, what we're doing is we're going to look at price targets for Tesla from Wall Street Journal, right? We got a price target of around 1,200. We got a low of around 67. We got a median around 755. I would get rid of the 12 and get rid of the 7 because they're statistical outliers, right? I may be bearish on Tesla, but I know that the market will pay more than $67 a share. However, the 1,200 to me seems a little bit over the top. OK, so we're about where the median is. 755 is currently trading at 758, 759. Right. So we're about right where this particular median target is. OK, so I would take all analysts stock targets, price targets with a grain of salt. However, you may want to kind of understand how the market may perceive it. Now, when you're looking at Goldman, we're looking at JP Morgan and maybe even BlackRock, their analyst or their price targets a lot of times hold more weight because of the size of the institution that they are. I've never heard of this Canaccord, but that doesn't mean they're not relevant. It just means I've never heard of them. But a lot of times when you're looking at the larger institutional firms, their price targets a lot of times will hold more weight in the market. Now, let's go into the electric vehicles, right? So we understand that Tesla sells cars. A lot of people will tell you that they're really not a car company, even though really the majority of their revenue comes from car sales. The other revenue that they supposedly have is a lot lower. It's a lot lower margin, or other revenues have not yet been realized. They're still in the R&D stage. So looking at some of their car prices, we want to ask ourselves if the economy for consumers doesn't improve, or there's massive inflation, where do we think Tesla's going to go? So the reason why we're doing this is we're asking ourselves what things in the macro market can impact share price. Now, this may not happen by the time we have earnings, but we want to ask ourselves what things in the macro economy can impact share price. Because when you're looking at a company, you got to look micro and macro, because the macro will bleed into the micro, right? So if we're looking at consumer behavior, the fitness of the consumer, inflation, looking at Tesla car prices, right? They're not expensive. Not all of them. Some are very expensive, like the Roadster. But looking at some of their car prices, how do we think that will be affected by the overall health of the economy? OK, and so because that's really where they drive the majority of their revenue is still from car sales. They haven't really split off into driving revenue from other areas. Now, a lot of people talk about, and what this particular analyst talked about was their battery storage or their energy business. So a lot of people say, well, Tesla's really going to be an energy company. It's a really good article from stockdividendscreener.com. where they talk about how much revenue did Tesla make from his energy business. Is February 17th, 2021. What we see is a breakdown of Tesla business segments: automotive, energy, services, and other, right? We understand that Tesla drives a certain amount of solar revenue per quarter, right? So here's Q1, Q2. So we're seeing 293, 370, 579, and 752, right? In millions. So this is quarterly, okay? Q4 2020. But however, what we got to understand is that it's trailing 12 months, that their margins on that particular segment or division is really not that great. So what we're seeing is that from Q4 16 to Q4 2020, here's the revenue gross margin from a quarterly standpoint. So we saw it spike really hard, late 16, 2017, fall 2017, go back up a little bit, 2018, fall 2000. So we're seeing a lot of spikes, but it's every time it falls lower than the last time. So here's a low, here's a low, here's a low. So the newest low in Q4 from a margin standpoint is lower over the past 4 years, right? So what we see is that their particular profitability for this particular division is really not that great. Now, this guy says it's going to be an $8 billion business in 4 years. That's cool from a revenue standpoint, but is it going to be profitable? One of the biggest issues that they have is that they're really not selling enough, so they really can't create economies of scale. Therefore, what they are selling is very expensive to produce. That's a problem that they're going to have to figure out. We're also seeing that energy gross margin trailing 12 months is also going down, flattened out around 2018 or early 2020, and it started to slide down. So it's the lowest it's been in 4 years. Started here 2017. It's not here, right? That's the gross margin trailing 12 months, right? So if you look at the chart, where is it at? It's almost at 0%, right? And it says it looks better compared to the previous one with all the zigzagging. Well, I don't know how it looks better because it's going down. It's been going down the past 4 years. So you got to understand is that the gross margin is declining, right? A lot of people believe it's because of lower sales volume. So if this is going to be what this company is going to be about, they're going to be an energy company. Well, they got to start driving revenue in that particular division, right? Because what they're doing currently right now is they're primarily driving the majority of their revenue from car sales. And, you know, people can say whatever they want to say. That is a reality. So the forecast or the projection is that they're going to maybe pick up revenue in these particular areas. The question is, how are they going to build out their customer relationships, right? Or the relationships from a B2B standpoint to drive that more revenue. So when we're looking at Tesla, right, what we want to ask ourselves is that from a bullish standpoint, how do they perform, right, going into earnings? Do we think they're going to continue to go up, maybe consolidate a little bit in anticipation of a good earnings? What is going to be what scenario would we like to see from a bullish standpoint? Then from a bearish standpoint, what scenario would we like to see? Me personally, as a bear, I want to see them move up, because it means they got more places to go down, because I understand that I think their support is around 600. So when I see it, I want to see them move up probably around 850. So then if they start to go down, that gives me enough room and enough meat on the bone to play the downside before I hit a support level. OK, because I don't think they're going to totally collapse on earnings unless their earnings is just totally terrible. And then a lot of other things happen behind it. What I'm also going to do is observe Musk's behavior before earnings. So are they going to try to release any PR, things of that nature, to try to make the market more bullish on this particular company as we go into earnings? And so these are the things that you want to look for. So what we do is we always combine fundamental and technical. I never really skewed on one way. A lot of analysts are purely fundamental. A lot of my TA people are purely technical. I like to combine both. That's kind of what makes me different in the marketplace. And then what I want to start doing is encouraging you to look at things from your own perspective instead of just taking what analysts say. Now, understand that certain analyst firms, what they say does move the market, right? But you still got to start understanding how to forecast and model things based on your own brain, because the only way you're going to get good at it is to do it over and over and over again. And you have the ability to do it. You just have to start getting into the practice of doing it and start having conversations about it. So that's how we're looking at Tesla going into earnings. What I want to give you homework to do is look at Tesla's last 4 earnings, and that's going to be on the NASDAQ page. And then look at the chart and understand, how did the market respond to it coming out of earnings? What was the market's response to it? Did the market become bullish, or did the market become bearish, or did the market become neutral? And that can be really, really important as a trader, because we kind of understand, you know, not just based on their numbers, but also on their guidance, how the market is going to perceive it. Because I know that their earnings that they had, I don't know when people thought that they were going to be profitable. Right before, not right before they got in the S&P, but right when people were going to see I think it was their 4th quarter of profitability, they were profitable. But after earnings, they traded flat because there was so much of a buildup going into earnings that profitability was already baked in. So the market essentially had, from an emotional standpoint, had kind of extinguished itself. And that's the thing about emotion, is that it can build up. It can be hard to maintain. So then when the actual event happens, nobody really responds to it because all the enthusiasm was in the buildup. So these are the kind of things that you want to observe. Now, if you're an options trader and you're not successful in the market, you want to really understand how to perform this type of exercise and how to really get a better understanding of the market. Reach out to me about the highest paid part-time job in the world, because not only do you get the course content, you do get a one-on-one consulting session where I can kind of show you how to walk through this and how you need to kind of put this together so you can get better and better at it over time. If you know somebody can get value from it, share it out. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.